Guys, John here, Mr. Forex Fire. So I just thought I'd do a brief video, and it's going to be a little bit of a value video on how you can use lower time frames, okay, to sort of look back to a higher time frame, if that makes sense. And what I'm going to show you, if you follow along, take a few notes and look at the concept on what I do. Hopefully it'll give you a little bit of a light bulb moment and a few tips as well. Okay, so let's just share the screen and I'll show you exactly what I mean. If you're not following me already, you can do so on YouTube. Okay, just look for Forex Fire. I've got plenty of value inside of here. Okay, on top of there, you've got my Facebook page and the wider platform that I'm part of. Okay, I'm just going to go over to the charts. Okay, so let's just have a look. So as you can see, this is a 15-minute chart. Okay, right, so if I could tell you, you can look at a 15-minute chart and identify what the higher time frame was doing without going to the higher time frame, you'll possibly say I'm crazy, right? But you'd be wrong. All you've got to do is just simply, okay, we just simply condense the area. Okay, let's just do that. And we're going back on here, June. We can see on here, we've got June 23rd. So let's just see if we can go back any further. (16th of June). So that's well over a month ago. Okay, so let's just get on the tool and you can mark this out with the path. Come down and you're going from the high to the low. Okay, and I'll explain why we do this in a moment. Now what we've got here is a high, a low, a swing high, a swing low, a swing high, a swing low. Okay, and we are currently, we haven't tested, or we haven't broke the structure of that. Okay, so this is telling me it's on a reversal, because at the moment it looks as if this is going to hold. It's probably going to bounce, retest, and go higher to go for these areas up here. Now, as I teach on supply and demand within the Discord, what we are looking at in between here is what we call fractal time frames. So obviously this, if we go on the higher time frames, which I'll do in a moment, you'll probably see where these come into play. So the intermediary price is always going to give you highs and lows between the path here. Okay, so this high to this low on a higher time frame will certainly be a more defined structural point. But as you can see on here, we've got that high there to that low there. We drag that out. As you can see, we get the arrow out. We've come down, and as we've come down, we've come back up to retrace into the supply area. Okay, from there, again, another structural point. This here, the last push down into there. You can see this was the last down move. We've came up, but then we've come back down to retrace into the demand area, because this will be a demand that's on the downside, and then it's pushed for a number of pips on there. We've run out 60 pip maneuver, which is quite good. Again, intermediary, the price reacting and things like that. What we've got as this has now starting to push out and up to here. If we look on this here, the block, push this out here, what have we got? As we've come down on a higher time frame, swing high, swing low, swing high, swing low, swing high, swing low, and then we've made a push back up into this block area. Okay, the supply area. We are now testing possibly at what we will call one of the quarter points, which is a 25. So we'll just go into this and make this into the supply and demand. There we have it, guys. It's wicked into the 25. And I don't make this stuff up, but there's something I just want to show you as well. Right. So what we've got when we look at it as a recap, you've got a swing high, swing low, swing high on the retracement, swing low, swing high, swing low. Okay. But now, because we haven't broke this here, possibly going to break this structure and go higher out of this demand block, creating further reversal as we go up. And then if we break out of this, we might come back down into 50% of this area, which is this structure point here. Okay, and I'm just going to define this up for you. You see this here, this down, get it correct. This here. See this last down before the up. So the price on this, as we had the retest from here, we might get a further push down into here, retracing into 50% of that price before shooting up and breaking the structure. Minus this out before shooting up and breaking the structure of the new high, creating a higher high. And I hope that's making sense, because obviously you've got a high low, creating a higher low. Now, what I'm going to show you as well, because we've mentioned these structure points, and this is intermediary price between these highs and lows. Okay, so we go up to the 1 hour. Just span that out. You can see how the fractal time frame, the candles are starting to contract and get a little bit tighter. So they'll eventually, in these swing points, start to form that actual one straight path. So go from the 1 hour, we'll jump it to the 4 hour. And there you have it, guys. There you have it. Swing high, swing low, swing high, swing low, swing high, swing low, swing high. Can't make this stuff up. And if I just make that a little bit bigger, and I'll just end it off on that. If you found that video any useful, educational, informational, please drop your comments below. If you want to see more videos like this on just how you can use the lower time frame without going to the higher time frame, be able to mark out your swing high points and swing low points, and then look at the time, the fractal wise within that initial path to determine your supply and demand areas, just like I've done there, then just comment below and I'll do more of these videos for you. Okay, guys? So thank you very much. It's John, Forex Fire. Catch us all later. You want access to the Discord channel? Again, just click the link below or just reach out to me. Okay, I'll always reply to everybody that needs the help. We'll see you later.